Good morning, everyone. Hey, Kevin, what's going on? Raj, what's up, brother? How are you? Good, good, good. Hey, Lonigan, what's going on? Long time no see. Well, here's the good news. The good news is the markets are functioning quite well. Markets are functioning well. Welcome to folks who are joining us on YouTube as well. I'm JJ, and we at the Trading Syndicate welcome you to our Globex session. And let's walk through this. Just curious to see if this 20 and 3/4, we crack through it. Let's take a look and see what we can expect today, ladies and gentlemen. And so, whoever followed us, the larger traders, we had a look above and fail. And that trade we called out. We called out the look above and fail. We called that out on the 16th. And we're not a we told you so kind of room, but we like to help people figure it out. So the market looked above 54.65, failed, rotated all the way back down to 51.48. Okay? And then we found the bid. We closed up here in the 51.86 area. And now, if we do not take out 51.48 today or during the week, we are going to get rotation all the way back up to 54.65. So those of you who are short sellers and have to short, I have to short, I have to short, right now the overnight inventory is long. The markets are functioning the way they should. And what does that mean? What it means is they are taking the liquidating inventory of yesterday under the close, right? You see it here. Profile charts help. And they are liquidating it at a higher price for profit. That's what it's about, folks. Never forget it's a market. Don't let people try and con you or fool you into some fancy talk that it's all random and all this stuff. It's a market. You grab cheap stuff, you sell it at a premium when nobody wants to buy it, you put it on sale, rinse and repeat. So what we're doing right now is we're rotating back and forth through this purple zone. Now, how I found that purple zone is explained in our room. I talk about it all the time. We do the same thing on a 1-minute chart as on a daily chart. And the reason is because the business does not change through the time frames. So the business is still the same on a minute by minute basis as it is on a daily basis. The minute chart just shows you how sales are going on a minute by minute basis. That's all. Okay? But the business itself never changes. It's not like we're selling brake pads in the morning and then, uh, you know, selling perfume at night. It's the same business. We're always just selling ES contracts. Okay? So now it's starting to look like a look below and fail of 51.48. So if you're a large trader, right? You would have looked for a position over 51.48 probably last night, and then you'd be selling into this move higher. So your upper levels are, look at our high today is 52.25 24 and a quarter, right? That level here is 52.27 and a quarter. So we're close. If we get above that, look for 52.67. That's this level here. Then 53.06 and then 53.42, so on, so on, so on. Those are our targets. Might not happen today, but I'm telling you, if we can't get back underneath 51.48, don't be short. Okay? Very simple. All right? Now, let's go take a look a little closer. You can see that the market is functioning in a very normal manner. Right? Hey, Dan and Eilich, good morning. How are you guys? Good to see you. Now, I read Bloomberg this morning, and they said there were few signs of panic selling. The selling was very orderly, right? Um, it's just a buyer's strike. Nobody really wanted to buy, and the selling was very, very quiet and very orderly, right? This shows us this liquidation was expected, right? We told you on the 16th, right? We told you on the 16th that we were going to do a look above and fail. So there was no reason to be going long, going long, going long. We told you on Wednesday that this was a likely scenario, right? Now we're telling you now that if the market does not correct inventory lower, right, it's going to keep rotating higher. Because what they're doing now is they're taking this product and they're selling it here. This is normal market, operations. Now, a lot of people will talk about the Japan, the Asian Open and the London Open and all of this other stuff. You can just ignore all that. All you need to worry about is the market functioning normally, which is, are they taking cheap inventory, marking it up and selling it at a profit? Yes, that's normal market operations. We have single prints, which means we have a short position in the overnight. How could we have a liquidation and then a short position? A liquidation is too much supply. Now we have a lack of supply. That means that the supply is owned and locked up here. And the suppliers, the sellers, don't need to sell it lower, so there is a short position created by people who are short underneath 51.87. Okay, that's what profile tells us right away. How do we trade it? Let's go take a look and see how we trade it. Here is our TPO chart, right? And these TPO charts, all they do, yesterday, you'll notice yesterday that J-Lo is always a great trade, right? Came down into the single prints, couldn't fill them, market caught a bid, and all the way back up over 51.48, right? All the way back up. M period crushed a lot of people. That's why there's so many people short underneath the close. And then you look at the N and the the N and O period, which shows you where traders are trapped. Why is that important? It's important to know where traders are trapped so you can actually trade with some sort of intelligence. And that's what we're doing now. We're distributing inventory from below the close, above the close. Hey, John, what's up? So, see, there's the close. The close is what? 51.84, 84 quarter, right? The point of control from yesterday is here, so that's where the inventory is priced. Here's that short position from 51.87 to 51.97, right? These are the lower stops. There's the overnight point of control, right? So distribution is good. Cost basis, right? Into more distribution. Now, let's go take a look at the balance zones. My balance zones are kind of this morning. Let's see how well they work. I got 52.01 quarter to 52.07 and 3/4. Double it up to 20 and 3/4. And you'll notice that there is some selling here, which shows me that my balance zones are working, right? Now, if we're looking for an inventory correction lower, say you're the I have to short, you know the crowd, right? So if you were shorting this area, your stop, right? If you're a big shooter, your stop's going to be the overnight high, right? At 27, or sorry, at 24. Or if you're cheap like me, your high would be here at the top of those candles, right? From this back and forth action, I can see that this is a distribution little balance here, which I'm not really keen on shorting it. I just kind of want to see them work this out. Hey, Etienne. Bonjour. Ça va? And VS, how you doing? Good to see you. And I got your email, VS. I'll be sending you a Zoom link at 9 our time. So, then we just keep doubling those balance zones. These are profit zones, right? There's balance, and then there's 2 times profit, 4 times profit. It's really simple. So right now, right, if you're a gun to your head trader, right, I would really like to get, before I went long here, right, because I'm seeing, why am I not wanting to short this? Well, because every time we go underneath 20 and 3/4, we pop back up above it. So if you were to go long, right, for those traders who are not conservative, right, put in a 21.25 bid, 21 bid, see if you get hit. And I would use, if you want to use a larger stop, use, I don't know, 19.5 as your out, right? Now the overnight high up at 24 is going to be your first test. So if you are long, put a little sell order out at 23 and 3/4. You guys understand what I'm saying? Right? Now this is if you have to take a trade. Me, I like to wait because I'm cheap. Right? And I really don't feel like putting money on it until they work this area out. But there are people, right? Remember, we have the degen trader crowd, right? The degenerates. And they need to take a trade. Otherwise, their head's going to pop off, right? So say you're long 21, right? So I took a degenerate trade, long a few at 21. Put some sell orders out to see if you can get filled. Because if nobody wants to buy your product, then you should sell it. That's how larger traders trade. They'll buy a position and then they'll put sell orders out. Because if the market does not execute your sell order, that means nobody wants to buy your grapefruits. Really simple, right? Really simple. So say you're long at 21, 21.25 on a couple of contracts. You know, put an order out at 22.5, 22 and 3/4, and see if you can actually sell a contract. Right? Now that is practical trading advice. Right? Because if you can't sell a contract at 22.5, why would you be holding inventory? Right? So out one at 22.5. Right? I'm going to front run the overnight high just because that's the way I am. Right? I will front run the overnight high. and I'll sell my contracts. I'm offered at 23 and a quarter. And as we get to the overnight high, my last one is 23 and 3/4, and I'm going to move that stop up. As I creep that stop up, let's see where they take me. I'm out at 25. No, 24 and 3/4. Okay? So if you want to trade a breakout, that's how you trade it, right? This is where you let the trade work. This is where you buy your position, and then you put your sell orders out so the market takes you out of the trade as the market goes higher, right? That's it. So I was looking at first as for a short. What convinced me to to not be short biased and go long? Anyone? It was this candle right here. See this candle? It stopped at 20 and 3/4. This candle looked below and failed. Then this candle, there was no dice. So that's where I started buying a few contracts. You guys get that? And then I told you where the sell orders would be, and I sold it into strength. I was out at the overnight high. I had one that I just trailed the stop up, and I followed the market up with it. You guys get that? Does that make sense? And that's why I like Globex, because it's slow enough that you can do trades like that, and you can see them. I was very tempted to do a short at 20 and 3/4. Then I saw, and how did I see that? Because I practice watching. Right? Now, had I not spent a lot of time watching these candles, right? I'm sorry, John, I don't understand the question. I was front running. I was front running the overnight high, which means I was selling before the overnight high. Then when we took the overnight high, I had one contract left, which I sold at 24 and 3/4. I trade Globex? Yes, I trade Globex. Trading Globex is great. You could see the agenda. It's very, very clear. Right? So Chen, right? You go and buy some, say you're selling Madeleines, right? Right? You're making them for 5 cents a piece and you're selling them at $1. It's not clear for you because you don't understand yet. And it's much more clear than RTH. You're just confused by all the stuff that you hear on the internet and that you've seen on social media. And it's confused you. If you clear your mind and think like a shopkeeper, right? Say you were selling croissants during the day and you had a bunch of croissants at the end of the day that you didn't sell. Well, you'd go outside a nightclub and sell them at night at a higher price to drunk people. C'est clair? C'est simple. John, just stop with all that stuff. Just watch the chart, John. Don't entertain all those thoughts. Front running is when you know that there's a level and you sell before that level because you know there's going to be selling there. It's really simple. Really simple. Okay? Just clear your head of all that stuff. Right? I was front running. Right? Just clear all that stuff out. Front running is when you know there's going to be a seller at a level and you sell before they do. So you can take the client. Get it? That's what it means for us as retail traders. Right? That's what we're doing in Globex. We're taking the stale inventory from yesterday and we're getting rid of it so the people who had to buy it on the way down can cash up a little bit. It's just simple business. Don't let anybody try and tell you different. Stop watching videos on YouTube with people who are just spreading misinformation because they don't know what they're talking about, and just zone in on the chart, right? That's all you got to do, right? That's all you have to do. Don't get sucked into all this stuff, right? How are you going to make money in this business? That's all you need to care about, right? Don't worry about who's doing what and this and that. Very simple. This business is very difficult. So you have to keep your analysis simple. Where do I put my trade? What is the business reason for the trade? Right? My stop is based on where the business does not make sense anymore. So had I been long 21 and a quarter, my stop was under here because that's where I saw support. Very simple. So that is my insurance on the business transaction, right? So I'm long here. My insurance is here, right? And then I put sell orders out to make sure that the market takes me out of my position as it goes higher. Then I don't have to chase the market and run around like a chicken with my head cut off. Keep it really simple. Yeah, and you're not gonna take those trades off the cuff. The only reason I took that trade is I've watched this over and over and over and over again. And here's the thing. When you actually watch, right? So what do we have? Why are we getting this big move up? Because everyone's trapped short here. Where I was thinking of shorting it, right? Hey, Cryptomania. Where I was thinking of shorting this, people are short from down here. VWAP is here, right? So the people who are now trying to cover are pushing the price up, and the people who are long here are having a field day selling. No, no, no. It has nothing to do with retail, Thousand Gods. Overnight inventory is long or short where the trading is compared to the close of yesterday. Period. Don't overcomplicate it, right? All of the trading, the general 70-80% of the trading is above yesterday's close. Overnight inventory is long, right? Simple, 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 right? Exactly, John. The people who are covering are making it worse for themselves, right? They're pushing the price up. Now, when I run a short, right? When I do a short squeeze, like people will pay me to clean up their stock, and I'll do a short squeeze, right? I will get my guys to go and buy all the cheap stock and hold on to it, right? And then we run the market up, and then when everybody goes to cover, we sell into it, and that's how we make money, right? Now, this isn't being done on purpose. It's being done because human nature. So whether it's manipulation or natural trading, human nature, the mechanics are the same. The reason why the market trades like it's rigged is because all the people with money and sophistication have been trained the same way. Retail traders have, they'll be, oh, your style is this, your style is that. You're an order flow trader, you're a fib trader, you're a dib trader, you're a whatever. On the other side, the people who control the business are all trained the same way. There's only one way to do business on the other side. You guys have millions of different things that you've done, right? That's exactly what I'm saying, Kenny. I'm not saying that this is manipulated. But if everybody who's trading 200, 300 million dollars is trained the same way, they're all going to act the same way, and the result is going to be the same. So if I've got 5,000 contracts under 5208 and you've got 5,000 contracts over under 5208 and both of us see that the shorts are trapped, we are going to squeeze the crap out of them. Right? Because that's just good business. See? Don't forget there's a wholesale element to this business, Kenny. And wholesale traders didn't just fall off the turnip truck. They understand the business. Retail traders have no clue what's causing the chart to move. So they're out there just throwing darts at a board, right? Well, I'm not going to argue with you, Kenny. I don't know if you've ever been in the business. I've been doing this 33 years, so I know what I know. I've been a seller. I know people who trade 3 to 5,000 contracts. So you can debate me all you want, but I don't really have time to debate that. I'm here to try and help people make money. And I just showed you guys how to do a trade. Right? If you want to have a debate, we can dig up William F. Buckley and you can go nuts. I don't make assumptions. I've been doing this a long time. And of course, you can take it or leave it. I'm not here to debate. You too, have a wonderful day. What's that, John? Yeah, I mean, if you're trading size, John, you're not going to announce your intentions, right? There has to be a bit of exactly, right? So now is when you have to use common sense, right, John? Just common sense, right? It's just a business. That's all it is. And now we go to 8 times profit. Yeah, somebody's really short. And that's why I told you guys to watch out for the look below and fail on a larger scale. And you just go 8. And this helps you keep perspective because now am I going to do that same trade again when the market is at 8 times cost basis? And look where we stopped. One tick above that 52.51 swing low. Etienne, hindsight is always 20/20. I like to sell it to strength. Now London is opening. London's going to price explore down. Do I ever? I am a fast trader, 1,000. So you know what? When I see 1,000, I think Thousand Island, like the dressing. Um, I'm a fast trader. I like to get in and out, right? I like to get in and out. So I have a trading method. I have an execution plan. My execution plan is as soon as I'm long, I put my sell orders out, right? As soon as I buy a position, I put my sell orders out. As soon as I'm short, I put my buy orders in. Because in fast markets, I don't want to be running around chasing. And manually closing a position is if I find that a trade is not working, I get the hell out. Right? So when in doubt, get the hell out. So now if you were short off that, if this is a look above and fail of 47, say you're short 45, 46, your stop is at 47, your first cover is going to be at 40. Sorry, 41 I would say. That's why I wasn't looking to long it at 8 times profit. Do you guys get that? This is 8 times profit. So is it going to go like this or is it going to come back in? If the business reason is gone, I'm gone. Hey, Terrence, how you doing? Good to see you, brother. Right? Remember, what is the information that you need to make money? Right? So if you were long, John, where you remember you've been away for a while, John. So there's something that I've been going into, right? And this is just a simple look above and fail. So you shouldn't have been long at 52.46, right? Because remember I said it's at 8 times cost basis. So if a car is $100,000, are you going to buy it at 800 grand to flip it at 1.6? You got to think about it in like common sense stuff, right? So if you see a big seller, get out, right? Like say you're long here, right? Say you went long at 48 and the market went up to 53 and you see a seller there. Get the hell out of the trade. What are you waiting for? So what Terrence is talking about is there's a business reason for a trade, right? There's a business reason for a trade. Every trade is a business operation. There has to be a reason to take the trade. If the business reason, say supply is running out, so you grab some supply, as the market goes up, you are the supplier at a higher price for profit, right? If you see competitive selling, then you will short the market. Now you are a buyer. If the seller goes away, you got to cover the trade if you're short, right? If you're long and the other sellers start selling underneath each other and price competing, you've got to get out. There has to be a clearly defined business reason for the trade. If someone is spouting off about trading and they can't tell you, right, the business reason for the trade, it's useless. None of this is random. None of this is random. If you think trillions of dollars move around the world randomly, right? There's no common sense. Oh, I'm just going to buy $1 billion worth of stock randomly, right? It just doesn't make sense, right? So right now we've got sellers at 44. So remember that look above and fail that we were talking about? Had you been short, say 46, let's be reasonable, 45, right? 44, you would have been trying to cover here in the 40s. Because now the offer is lifting back up. So the sellers have seen buyers, right? When the sellers see buyers, they raise price. When the sellers see that buyers are leaving the store, what do? They give you a better price and lower price. It doesn't matter when there's new money at Chin. Don't worry about all that. Etienne, tu sais, il y a un mot niaiseux. Vous comprenez? Niaiseux. Stupide. Il y a beaucoup de choses stupides sur le sujet. Don't worry about all that new money, old money. Let's all just fluff. Yeah, I speak French. I'm Canadian, right? Les niaiseries, right? And there's a lot of people who just pump out stupid platitudes about trading that have no grounding in actual business, right? What is information you can use? John, there's a seller at 52.24. That's all you need to care about right now, right? How can you tell there's a seller, John? That's what you were talking about, right? There's a seller there. Boom, boom, boom. I'm not a New Yorker, I'm a Canadian. I wish I had lived in New York. I spent a lot of time in New York, right? Look, there's a seller at 44. So if you're long at 40, you know that you better start selling, right? Because you got competition. Very simple. And if you keep your analysis simple and you keep all those gremlins out of your head, right? Then you'll be able to actually execute and make some scratch, make some money. That's all you need to care about. Listen, folks, my job before I leave this earth is to help people unravel all the BS that there is out there, right? Right? I want you to make some money and live a decent life so you don't have to get sucked in to spending 18 hours in front of a screen, blowing up accounts, having your wife scream at you, all of that stuff. We devote so much time to learning how to do this, and yet so much of the information out there is completely wrong, right? Or just fantasy, right? I want you to make your money and go enjoy your life. That's all I want. Make some money, go enjoy your life. If you want to get on a prop desk, if you want to get in the business, that's another story, right? I'll coach you that way too. But most people have a life, they have a job, they just want to make some extra income, right? And they don't want to go through 10 years of BS to make some extra income. And you don't have to if you keep it simple. Now it's your job to block out all the noise. I can't do that for you. What is the most common yet biggest BS? There's so much. There's so much. There's so much misinformation, right? It's because you know what? Trading education is completely unlicensed. Anybody can be a trading educator. They could say, What was your last job? Well, I worked at Rotten Ronnie's making fries, right? Now I'm teaching you how to trade. There are people out there who charge $40,000 to teach people how to trade and don't even tell them what a spread is or a bid and an ask and what the difference is. It's criminal. So, had you been a short seller and say you were like a longer term, right? How you use this information is you could stay short if you see that seller. Now, I would have covered down here, but for a larger trader who's got a bit more patience, if you see that there's a seller there, you can stay short, and that helps, right? If you could see that the sellers are moving down and they are competing, right? If these single prints, if you're a TPO trader, if they're getting filled, that helps. This green box from 24 half to 37 quarter is a big box full of buyers. The only problem is we don't know who's lurking in here. So we have to use these candles, right, and figure out where the bids could be, right? Right? They're coming into this area here, so they stop selling, they lift. Now let's look for a seller. So if you are short and the market gets above 42, then you've got to govern yourselves accordingly, right? But if you are short and the market can't get above 40, then you're all right. Right? So if you're short 37 and 3 quarters, right? I hit just one. I'm short 37 and 3 quarters on one, and I'm out at 34 and a quarter. Right? I shorted 37 and 3 quarters based on the fact that I saw a seller there at that candle. Right here. Right there. Where is it? Today's a good learning day, huh? I'm learning myself. We always learn something, right? Yesterday I was not tuned in. I still had weekend brain. It took me an entire day of trading yesterday, and I didn't trade much, to actually get back into the flow after 3 days off, right? Globex is a great time to learn. And why is that? Because there's a very simple agenda in Globex. Now, do you guys know what an agenda is? Right? When you go into business, you have an agenda, right? I'm going to take this stuff and I'm going to sell it at a higher price. That's an agenda. The chart tells you how well that agenda is playing out. When we have these orders in, can we not leave one in with a trading stop to possibly catch a big move? Well, John, if I were you, I would work on just getting consistent first. Don't worry about the big moves. They will come. What I want you to do is just get consistent first, right? Everybody wants to catch that big move, and I understand that, right? But just let your skill level catch up with the P&L. Does that make sense? See, everybody thinks they should make 10 grand a day trading, right? or 5 grand a day. But they can't make 50 consistently. I know. I used to be in that. I thought this was going to be easy when I started. I'm the first one, right, to admit that I went through these things, right? Because I was a $1 million deal maker, right? Liquidator. I thought, you know, I thought retail trading would be like a walk in the park. It's not, right? And it was embarrassing. The shorts are seeing sellers, so they're dropping their bids, right? You will never ever hear me whinge and whine that I sold too soon or that I covered too soon. I am happy to make the amount of money I make, right? Right now, John, don't do that. Just learn the basic steps first, right? Don't just do exactly if you follow exactly what I tell you to do without changing anything and you do it 1,000 times, right? Then you can start trailing stops and leaving a runner and all of that stuff. Right now, just get used to the method and keep your brain free and clear, right? We want consistent profitability. You're just resenting the idea and the question. Presenting. Yeah, no. And my answer is don't worry about that right now. Just get used to taking a profit. How about this? Does this make sense? Get used to making money instead of losing it. Can we all agree on that? Can we just get used to making money? Like, you have a little store, a corner store, and you're selling goods. Those guys don't, they just want to make some money and cover their costs. A little humility, right? And letting your level of skill catch up to the level of profit that you think you should be making. You have to, your level of skill, you don't have the skill. Nobody does. Nobody leaps out of the womb and trades like a god, right? It just doesn't happen. You have to build your level of skill. You just can't get around it. Build your level of skill, right? If you can't fly a Cessna, how the hell are you going to fly a Harrier jump jet? It's just, you have to think about it in practical terms. But unfortunately, social media has brainwashed people to think that they deserve to make 20 grand a day, $1,000 a day, whatever it is, and it's easy. It's not. Learn how to make 50 bucks a day consistently, right? There is no shame in perfecting your craft and learning your skill. No, I don't really, I just watch the offers, Terrence. I don't care about the bids. The bids are the suckers, right? The offer is the seller. The offer is the one who has all the inventory. They will set the price. So if the buyers go away, the offer will move down. If more buyers come in, the offer will move up. Just watch the offer. And there's less stuff to look at. I'd rather look at one line than two, right? The simplest thing. Keep it simple, right? Look, there's a seller there, right there. Then there'll be sellers here and then here. I think candle charts are underutilized. I think people teach candle charting and they come up with all these fancy patterns, right, when all of the simplicity is overlooked. And the candle chart, if you use just a little common sense, you can tell that the market has sellers here. And the sellers move down here. Then the sellers move down here. Now they're here. So if those sellers see a bunch of buyers lining up, of course they're going to raise price. They're not idiots. But if there's too much competition and not enough customers, they're going to lower price. Now that is important practical information that you can use. Hey, Crude, how you doing? Practical, simple information. Where do I put my buy order? Where do I put my stop? What is the business reason for it? Where do I look to get out of the trade? So, for example, if you were a buyer here at 32, your stop would be under that candle and you'd be selling before 36. Because those are the business conditions that you are presented with at this point in time. Now, if you have a larger account and you're trying to hold it, if we get past 36, your next sell order is just under 40. This is a tactically intelligent way to buy and sell a position. Everything else is fluff. Price stability, if we can hold 32, Terrence, that'll bring in buyers like people into the club, right? You see them standing outside the Roxbury, right? Then they'll start, the lineup will increase. But if we can't hold 32, we're going to come back down here, right? Now we still have some trap shorts. This is that old overnight high. Remember the old overnight high? That's why we have buying here. We filled most of it, but we have trap shorts in here, right? So just keep it simple, right? So if I was short, if I was still short, and I was hitting it, and I saw that there's a wall of sellers, like John said here at 36, I could stay short. Say if I was short 44, 42, right? And I covered a little bit at 32. But I can see that there's a wall of sellers. Now, are those sellers going to lower their offers and come down here and then down here? Because that's what I want. I want the offer to move lower, right? Make sense? If the offer starts raising, if it gets above 36, I'll close that short trade, right? Get in the habit of paying yourself, because retail traders are always looking for a bigger move and they forget to pay themselves, and then the move evaporates because they don't understand what caused the move, right? And then that's why my stop was at break even and I broke even. And then I do 20 break even trades and the commissions just eat into my account. That's not how you do business. Right? Seller's still there. Look. I'm not making this up. The chart's telling you. It's right in front of you. Right? How clear is that? This is an indicator that costs nothing. Zippo the hippo. Right? The chart is telling you that there is a seller parked at 36, 36 and a quarter. Once the buyers realize that, they're going to try and drop the price that they're willing to pay, right? If you know that people are competing at 36, maybe I'll try and buy it at 33. If they start competing at 34, maybe I'll try and buy it at 32. Right? Exactly, Terrence. Offer up. And Terrence, you're in our Discord. You can use the Discord for the chat if you wish. So any other questions? So what are we going to do now? Let's zoom out a little bit and look at this 1 minute chart from a larger perspective. And that'll maybe give some clarity. You see that where are we right now? Where is current price? And all the inventory is underneath 52.16, right? So this is the cost basis of the recent inventory, right? And this is the distribution of that inventory for profit. Does that make sense? So we're in distribution now. So you see how we're getting above that 36? Next level that you're looking for, if you were along, is maybe 38, 39, right? And as we come up into those 38, 39s, you'll see that there should be a seller somewhere in here. Do you guys understand what I'm saying? Right? So now we're in distribution. Does this make sense? This way you have a tactical way to trade, right? I don't trade in the middle, right? I like to trade at the edges, the look above and fail, right? Or the look above and go, right? Or the look below and fail. Keep it simple, ladies and gentlemen. Work on your skills. Don't worry about how much money you shoulda, coulda, woulda made, right? It's not yours until you've made it and gotten it out of the brokerage account, right? Don't worry about all that. Worry about becoming skilled. Because once you develop your skill, the money will come. I'm just using the top of this candle. See, this is new since you were away, John. Do you see the tops of this candle here? That's where they initiated last time on the way down. So they will sell there again. You can actually see that they're selling here now. Right? That's why. It's the first spot. So now you can see that they're selling here. They were here, they moved it up a couple of ticks. But the top of these candles is going to tell you, if you're long, where you're going to encounter resistance. It works like a charm, especially in slower markets. And this is something they don't tell you in any candle book that I've ever read, that the top of the candle is created because wholesale sellers are competing, right? Write that down. Then you know where resistance is going to be, right? The top of the candle is created by the competition amongst wholesale sellers. That, my friends, is resistance. And it's the most practical way. It is absolutely the most practical way to do this. It's the way it works in the business. No problem, Terrence. No problem. You folks have a good morning. Stay safe out there. Remember, wait for your setup, take your trade. If your setup doesn't come, just relax and wait, right? Have a wonderful, wonderful morning. Come see us at the Trading Syndicate. We will see you soon. Oh, yeah. There's a code here that I'll leave up. If you want to get 25% off, I promise you, you will learn more in a month with me than you will in 10 years anywhere else. I can guarantee it. All you got to do is open your mind and listen and be able to follow simple instructions. VS, I'll call you in half an hour. I'll send that Zoom link now. Look forward to speaking with you. And if anybody else wants to talk about private coaching, I'm vwaptrader1 on X. And thank you. Have a great morning, everyone. Bye for now.